Hi everyone, let's go over my Elliott wave scenarios on the Bitcoin chart as well as a couple of channels that I find very valuable. Starting on the 4-hour time frame with the first bullish scenario where we are looking for price to continue towards the upside after it finishes this blue wave 4. The common target for this wave 4 is between the 0.236 and the 0.5 Fibonacci taken from the low of this wave 2 to the high of your wave 3. Giving you a target between 89.3k and 84.6k. The invalidation for this scenario is price moving to the downside and touching the 0.618 at 82.5k. If we then have a look at two channels that are relevant in this scenario, then the first channel I like to show you is called a base channel. This channel is taken from the low here that we had at about 67k to the low of the blue 2 to the high of your blue wave 1. What you're looking for is a wave 3 to move away from this channel. You want to see it break the upper trend line, move beyond that upper trend line, and then a wave 4 can come back towards the channel. What you don't want to see, however, is a wave 4 to touch the lower trend line of this channel. The moment it does, it is better to look at other scenarios, including the alternative scenario that I will show in a second. The second channel that I have on my chart here is called a trend channel, and this channel is taken from the high of blue 1 to the high of your 3 to the end of your wave 2. And what you're looking for is price to break the lower trend line of this channel, which it has done, which therefore does increase the probabilities that you are looking for a wave 4 that is matching the blue wave 2. Now, short side note that if you pull the channel to this high here, right, then you will see that this previous range also did shortly break the lower trend line. It's just that when you count this structure to the upside here, so the subwave of your wave 3, it counts better as a 1, 2, 3, 4, 5 wave structure. So that is why at the moment I prefer to pull the trend channel like this from 1 to the all-time high here to the low of 2, and you can see it has been broken, so it's interesting to look for a blue wave 4. The alternative, a bullish scenario, would be a bigger wave 4. So here we then have our 1-2-1-2, but now a finished 5-wave impulse to the upside in blue, finishing the green wave 3 and therefore looking for a bigger green wave 4. Now the target for this wave 4, again between the 236 and the 05, but this time taken from the low at 67k to the all-time high, giving you a target between 87.2k and 80.1k. The invalidation now is the 0.618 at 77k. After this wave 4 though, the result is the same as you are still looking for price to continue towards the upside and look for new all-time highs. If we then again pull some channels on the chart, then this again is a base channel taken from the start of the green 1 to the end of the green 2 to the end of the green 1. And what you're looking for is your wave 3 to escape the base channel, which happened as you can see. And eventually we want to see a wave 4 move back towards the base channel. Doesn't necessarily need to hit the channel, it's just that you move back towards that base channel. This is the trend channel matching the green count. So this channel is taken from the end of green 1 to the end of green 3 to the end of your green 2. Now before this green wave 4 here starts to increase in probabilities, you would want to break the lower trend line of this channel. And as you can see at the moment, we're quite far from the lower trend line of the channel. The channel at the moment with the current candle we have here, if we pull a line straight down, is at like 80.4k. So if you're really moving in a green wave 4, then preferably it's going to be more of a horizontal sideways structure, of course moving down, but a longer in time type of structure, right? The bearish scenario on the 15-minute time frame is a bigger zigzag to the downside, after which we still look for continuation to the upside. In this scenario, we're then looking for a 3-wave B, and we do have some resistance to the upside here, the daily naked point of control at 91.8k. So it's good to be aware of that level, see what price does, if it can hit that area, and if there is interesting signs of weakness, a move down for wave C is interesting. Wave C, however, has to be a 5-wave impulsive structure to the downside and take out the low of A at 88k. You can also see a red line here on my chart. That is the point of control of this previous range at 87.4k. So that is an area of support. Your bullish scenario would be a 3-wave corrective structure to the downside and now impulsive continuation to the upside. Now price here touched the 886 taken from the all-time high to the low, which generally would increase probabilities to counter move to the downside as a corrective structure. However, of course, the subcount matters. And if we want to count this as a 3-wave corrective structure, it's actually quite challenging to count it nicely from an Elliott wave point of view. Now, let me explain. If we count this as an ABC, which is a zigzag, 1, 2, 3, 4, 5, 3-wave in B and another 5 in C, then your wave A becomes a little bit of an issue. So you then have your wave 1, 2, 3, 4, and then a wave 5 to the downside. It's just that your wave 4 is incredibly short in time compared to your wave 2. Take a fib time from the start of 2 to the end of your 2 to, let's say the end of your 3, which must be one of these candles here. Then you can see that your wave 4 ended before the 0.382 fib time, which is incredibly uncommon. A wave 4 most commonly is even longer than a wave 2, and the minimum target would be to finish after the 382, which it didn't. So it does lower the probabilities to count this first structure here to the downside as a 5-wave structure in a wave A. Now then alternatively, we might look for a WXY. So then this becomes a 3-wave in a wave W. This move up here is your X. But then where is wave Y, right? Because we are then looking for a double zigzag, which means this has to then be a 3-wave structure to the downside, which we can't really see here on the lower time frame. So it is quite tricky to count a nice finished 3-wave corrective structure to the downside and look for impulsive continuation. Now we did have some bullish CVDs stacking here, higher lows on price, lower low on the CVD, but these already played out as price took out these highs, and on my chart it also took out this high here with the wick that we just formed. Therefore, on a 50-minute time frame on my CVD divergence chart here, you can see the bullish CVDs playing out nicely. And also this one here already played out on my Coinbase chart. So I'm not interested in any of these bullish CVDs anymore. The only way I would get interested in new bullish CVD divergences is if price can continue moving to the upside, creating higher highs, higher lows. So what I like to see is higher high, higher low, preferably on a 15-minute time frame. Would be nice to then flip the daily naked point of control and see continuous new bullish CVDs coming in as price then moves towards the upside. So this move down here, any bullish CVDs, not interesting to me whatsoever. If we then look at the news, as we do have some news today, Thursday, November 14, 2:30 p.m. is Central European time. There is some high impact news, so make sure you trade safe, as well as 9 p.m. is Central European time, so it might increase the volatility. And if we then look at the probabilities of the different scenarios, then on the 4-hour time frame, the probabilities remain bullish. It is absolutely normal to have retracements in a bull market, and also these retracements give new opportunities to be part of the bigger trend. On a 15-minute time frame, it's a bit more tricky because we have the potential here for a 5-wave move to the downside for then a bigger zigzag from an Elliott wave point of view. But we do have the bullish CVDs stacking here. Now, as mentioned, the two main bullish CVDs over here already played out. And if I look for price to take out this high, then what I like to see is a continuation of structure, move above the resistance, 91.8k, with continuous new bullish CVDs, and that would be very, very interesting. If instead we start to get more and more volume with price moving impulsively to the downside and maybe bearish CVDs, then yeah, I'll be looking for price to take out that low. In general, we are still looking for price to continue the trend to higher prices, so this remains completely unchanged. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.